Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Thursday, March 28th, 2013. Let's take a look at what's on tap for today. Alright, we have this GDP number that we mentioned yesterday, which could be interesting, and jobless claims. Could give a boost to the market. I think the market right now is probably looking for anything, any good news. Looks like, as of right now, a flat to slightly down open. Yesterday morning was kind of a surprise, wasn't it? I thought that we were headed to the basement. I thought maybe it might be the start of the big slide. But it recovered nicely, I thought. And it created some opportunities as well. And we'll discuss those in a minute. And actually, gold jumped up above 1600. Silver still around 28, but I believe it was, for a while yesterday, it was over 30, if I remember right. And oil's at 96 and a half. Which is pretty dang high. And let's see if there's anything else of interest. The SPX, or the S&P 500, still banging up against that all-time high resistance level. And you can see it here. You know, we still have our alert at 1576, and it has not gone off yet. And it's really, this is pretty unusual, I have to say. I mean, this has been going on for 3 weeks. So I find that pretty interesting to watch. I really can't say anything about it because I really don't know what the heck it means. But typically and historically it means that it's a point of, is it going to continue? Or is it going to reverse and give us a correction? We don't know. All right. Let's take a look at in play. Google exited that yesterday. Let's take a look at the chart. I have a short video that we can watch, and it's basically my thinking on this exit yesterday on this bar. So stand by. Alright, here's the open of the market. Google just dropped quite a bit today. I'm going to go ahead and attempt to close this vertical here for $1. Right now it's at $1.43, so hopefully it'll work its way down to $1, and then I can get out and I don't have to worry about it anymore. Apple alert went off. Let's take a look at Apple. Here's Google. It was down here to 801.59. So I do have an order sitting out there, and I'll show you right here for $1. It's right here. Buy it back for $1. Collected $4.55. Buy it back for $1. I'll be happy. Let's take a look at Apple and see if I still might want to do that. Oh wow, that's a significant gap down here, I would say. Let's zoom in here a little bit more. Yeah, this is a pretty big gap. I'm going to wait a little while. So the alert went off. I'm just going to wait a little while and see if I still want to do this trade here or not. Let's see here. Here it is. I may want to move this put down a tad. Put down a tad? We'll see later today. And I'll try to do a live trade on that one too. Rest of the accounts, if I go and take a look at all of them, the insurance policies are up pretty good today. And actually, you know, everything else is up. Of course, Google's making a huge contribution here right now. Everything else is sort of okay except for Priceline. I might be a little concerned about Priceline, but we'll worry about that later. All right, that's it. All right, welcome back. So it was right around here, I would think, when my limit order was put in, and it did hit the limit later. I wasn't in the room, but I heard Thinkorswim go clink and tell me that the order had executed later on during the day, sometime after, probably on this 10 o'clock bar here. So I wanted to get out, I wanted to do something about my risk. I was not really comfortable with it. The other thing that happened yesterday was IWM. I rolled that, so let's watch that short video. Alright, so here we are with the IWM insurance policy for this month. Market's down a bit right now, and we are up $70 on this so far today. So the total loss as of this moment is $28. Alright, so let's go over to the Analyze tab. And I don't usually do this, but we're going to roll this because we have a June 4th expiration on the back month. So right now, if I look at the short March 5 puts, the 87 and the 91, which is the ones up here, where I collected $1.45 on them, and now I can buy them back for about a nickel, both of them for a total of about a nickel. So at Thinkorswim, when I do this, this is not going to cost me anything in transaction fees because they're 5 cents or less. So when I do that, this is what the trade's going to look like. It's going to look like basically like I have two different strikes on long puts here, so that's why this line is not perfectly straight. It's because of the two different strikes. If I took one of them out, then it would look like more like a normal one would. So I'm going to buy these two back, and then I'm going to sell the April's 2, 87 and 91, and I'll collect, this is going to cost me a nickel, and I will collect another 58 cents here. So far this trade is going to be working out from that perspective, at least as far as the rolling is concerned, and it's going to end up looking like this. We lose our peaks apparently, but I don't know if it's just a nuance of the Analyze graph here because of what I'm doing or not. We'll find out what it looks like after I'm all done. Alright, so I want to create a duplicate order here and just go ahead and shoot that off, and that's going to be for what are we buying it back at? 1 penny. Alright, so we're going to send this off. That should execute right away. And then we will, now I can take this off here, and then we're going to go ahead and buy this one back too for 4 cents. That should execute basically right away as well. There we go. Now we're just going to go ahead and I'm going to create duplicate order here. 12 cents. Natural is 12 cents. So I'm going to, do you think I can get 13 for it? Well, I don't care. 12 is good enough for me. So I'm going to go ahead and ship that one off. And then I'm going to sell this one for 45 cents. And we only got a penny spread there, so I'm happy with that. Alright, we are done. We're now showing something a little bit different here. We'll take these March 5s off of here because sometimes they mess it up. Okay, now we're back to what we're used to seeing on a risk graph. Now, we're down here, but yeah, this isn't really true. This is not really true. So I'm going to have to see how this gets straightened out here. And we'll see how it gets straightened out later on today. Okay, let's take a look at the Analyze tab and see how that looks right now. Alright, it's not real pretty, is it? It's still showing this huge loss here. And my guess is that it's sort of calculating this incorrectly. These are the April shorts that I rolled to yesterday, that I collected a little bit on. We're still, I think that what it's doing when it looks at this is it's thinking that I've already taken this loss here. So it's actually showing me that there's no way that I can make any money on this. If we take a look at this here, we paid $1.98 for it, and it's worth $1.18 now. So it lost it lost 160 bucks. That one did. And if we take a look at this one lost 235. So that's probably pretty accurate. Now, if we get this anticipated pump in volatility, now we're talking that we could come back here and quite possibly be profitable. So remember, originally I was willing to, it was an insurance policy, right? And I was willing to basically eat it. So I managed to pull a little bit more out of it. You can see I collected 12 cents, and it's worth 10 cents now on this one. And this one I collected 45 cents, and it's now worth 31. So we're at least collecting money on those shorts. So this looks ugly, but I don't think it's really as ugly as what it's saying that it is. And I think it's because I rolled that this is a little bit confusing here. Alright, and I may be wrong. If anybody has any comments about that, I really am not an expert at rolling calendars, and I really have never done it before, but I did it yesterday morning at that time because it was an opportune time. So, I mean, the Aprils were up a little bit in their value, and if you want to look at a chart of a option, you just type .IWM, and then let's take a look at the Aprils. Which one was it that we were in here? We're in the April 2s. So we need to start this over again. IWM, and we'll look at the April 2, and we're looking at the 87 put. Let's look at the 87 put. Let's start over again here. Oop. I know that. IWM April 2 put, and we want the 87, which of course it's not showing up here, so we'll just type 87 in there and we should get a chart. Hit enter, and up comes the chart. And you can actually, well, I guess this one hasn't been in existence very long, so you actually end up getting a chart on it, which is nice. My guess is that this, they just opened this one up here on 315. Alright, so let's go back to the monitor tab and take a look at what's going on here. And we're looking at all accounts now. IWM fell down here So that's what I think is happening here is Thinkorswim, at least on their risk profile, is just thinking that I have just a hodgepodge of options here. So we have to watch IWM down here. It's no longer thinks of it as a calendar because it was not open that way because of the roll. So these are insurance policies. And here I have CF Industries, which is a little heavy on the delta side, especially for a one lot. If I had 10 lots, it would be 100 deltas. So I'm thinking about closing at least the put side of this today, and let's take a look and see. And here, if I close the put side, it's going to cost me 94 cents, and I collected 113. So assuming that price stays the same today and I do decide to exit, I'm probably going to be flat, maybe a little bit down on this with transaction costs, but better than creating a loser. So this is what it would end up looking like when I get done. And that is $1.16 average price and mark 10. Okay. So this price that you see right here is the price that you paid for it, or that it cost when you opened it. And I'm really kind of thinking out loud here because I always was wondering, what the heck, why don't they show the current mark on those? I think I would rather see the current mark, or at least a column with the current mark. But it can't, so they don't show it. So I might be exiting CF today, and I'm kind of rambling around today. Maybe a little bit different here. Apple, I didn't do anything on it yesterday. Didn't like the move that it made, obviously. So is it going to be continuing down? We'll just see how it works out today. Oh, Apple, what are we looking at here? 450, 451, probably going to open down a little bit. So I was adjusting this when I was looking at it yesterday, and I just could not get the money out of it that I was hoping to get. Let's see if it changed. And now, yeah, it's up a little bit, but you know, I was hoping to get $100 out of it, and even if I do two of them, I won't even get $100. So I don't know. That's 8 times $1.25. That's about $10 just to open the trade and transaction costs. We could put that down here on the include. 72.82. So that's, yeah, $10 on transaction costs to open this one up. So even though the probabilities are pretty great, and I was looking for 10% on this end and 5% on this end, may have to go out to a further expiration, and I don't feel comfortable about doing that either, especially with Apple. So I may find something else to do a condorized credit spread on. Let's see, A+ list. See if there's anything going on the ones that we are not in. I just looked at Apple, Baidu, CF. How about Chipotle? Anything fancy going on there? No. Now this one could be a good possible condorized credit spread on this one, just because it's languishing. Momentum is really coming out of it. Let's look at any interesting strikes that we could do on this. Was I already thinking of doing one here? Let's take a look. Okay, if we want 10% on this end, just see what we come up with, and 5% on this end. for this April expiration. That would put us around, on the put side, let's say 275 and 270. I gotta move this thing over. Okay, that's pretty close, and we're looking at 330, 356. So on the call side, it would be 355, 360. Okay, that's about, see how much this volatility gives you premium here down on the put side, where you're at 5% on the put side and 10% on the call side, and the prices are just about even. So we are including, so we have $64 profit just doing one lot here. If we did two, 128. This would be a good one, so I'm going to make a note of this one. For 328, CMG. And again, I call these condorized credit spreads. Unbalanced condors, non-delta neutral condors, I don't know, whatever you want to call it. Actually, it ends up being pretty delta neutral, doesn't it? So I'm kind of liking this one. Let's just take a look, set the slices to the break even here, and then set slices to charts, and we'll change this to a daily and zoom out. Oops. Out, Jeff, out. Wow. That definitely should work out, shouldn't it? Here's our break-evens. And here is our expiration, April. That is our expiration, right? Yeah. That's pretty sweet, isn't it? And that's pretty much a almost like locked and cocked and ready to rock profit on that one. That's pretty attractive. So, yeah. And then the temptation, of course, is to tighten this down, but not a good idea. The other temptation is to go out another month. Let's go out to May, and then we'll have to make some adjustments. No, we're 10% and 3% here. That's still not too bad. And we're talking about $200. Still is pretty much the same break-evens. Nah, I think I'm going to stick with April. Yeah, April's fine with me. I think that just about anybody would agree, so I might even crank this up. And let's see, which account would this be in? I think I would have to do this one in my Profit 10 portfolio account, just because it's that kind of, it's sort of a delta neutral trade. Let's reset the slices here. So you can see that the deltas go up as my amount of lots go up, roughly 1 to 1, one whole delta for each lot. Okay, so if this goes up to, if I only had one lot on these instead of 5, if it goes up to 5 deltas on, if I do 5 of them, it'll be up to 50. But like I mentioned, this has a lot of potential of being a good expiration of, working out. Look at this. I mean, you have to really, this really has a good probability of working out for us. Okay, now back to the A+ list. MasterCard or Google we just got out of yesterday, and with that big gap, I'm not interested in anything there right now. Netflix we're in on 2 ways on that one. Priceline and Panera, and that's it. So really just Google and CF are the only ones that we are not in right now. Okay, might have been a little bit confusing. Geez, I even might feel that I'm a little bit confused. Maybe it's too early this morning. I don't know. I had my coffee. Maybe I should change and wait till I have 2 cups before I make a recording. I'm not sure. Anyway, that's it for today. Thanks for watching. Have a great day and happy trading.